Welcome to the REI Foundation Podcast, where we cover all the steps and strategies to make your real estate dreams a reality. Now your hosts, Jason and Peely.
Hi, everybody. Welcome to the REI Foundation Podcast. This is Multifamily Mondays with Jason, Kevin, and Peely. Welcome back, Kevin.
Good to be back. Thanks for having me.
Awesome. Always good to have you. So today we're actually going to have a little bit of a mindset question. We were talking to a couple of other investors who are thinking about getting into multifamilies, and their question was, when is the best time to get into multifamilies? And well, I think we should get back to like the simple question, as is, why multifamily? So maybe we can delve a little bit into both of those questions. Why multifamilies, and when is a good time to do it?
Sure.
Take it away, Kevin.
Okay. Well, I guess most people that consider multifamily probably start on the single family front, which obviously single family, if you're investing in single family and single family rentals, it's very binary. You're either rented or you're not rented. Multifamily gives you the ability to have multiple revenue streams within the same apartment building. So obviously the larger complexes you can dive into, the more revenue streams you have and the further you are away from being at binary.
Nice.
Sure. Yeah, I would say that when you are pushing into large multifamilies, you have so many things to your advantage. Of course, you have cash flow, and you have cash flow across many different units. So if you do have a vacancy hit of 2 or 3 apartments within a 100-unit apartment building, your spread's much greater, that you can actually carry that much easier than if you were in an 8-plex and were maybe down 2 or 3 or 4 units. It may become difficult for you to pay down your mortgage and to cover your expenses, et cetera. Past that, there's tax benefits from larger apartment buildings. There's many different strategies you can put together. Cash cost segregation reports and other things that can definitely help on the asset. You can force appreciation very well because the numbers are driven by the income and the bottom line, the net operating income that you can create. So you can force the appreciation and improve the building through many different things, from being able to cut expenses or raise income just on simple components. There's the depreciation factor, which plays into your cost segregation strategy. And then there's just the simple ability to have appreciation by raising rents. And even though your expenses may track it, but you can raise rents yearly 2 or 3% to keep up with the market.
Nice. Well, I guess I'll rephrase the question another way. Like, say I'm a passive investor, and say I want to invest my money, either like I have a bunch of private money that I want to invest in. Why would I want to invest my private money into a multifamily instead of, let's say, a house flipper that does a lot of flips over the course of a year? Like, what's the benefit to being in multifamily?
Sure. You have a lot of economies of scale, and house flipping is great, but that's a continuous process. So you flip a home at 3 months, and then you have to be able to look to push that capital together to the next project to flip that may last 3 or 4 months. So you have your money constantly in and out of deals. Whereas a multifamily, you can get on with the economies of scale, where you're basically investing in an asset, and the asset, due to the economies of scale, can carry having now all the advantages we spoke about before of cash flow, appreciation, depreciation, tax advantages, and still now afford to have a full-time staff, a maintenance guy, and managing company, a maintenance guy, office staff, resident manager, that a large multifamily can basically carry for you. So it makes your investment more spread out, more safe, and it can sustain many, many years. So you don't have to worry about constantly have your money put to work. And when you are putting your money to work, and the house flipper may do great, but it also puts them at more disadvantages to have maybe 1 or 2 that don't go correctly or as planned.
So you're saying that the risk might be a little bit higher in one or the other?
Sure.
Okay.
Sure.
Okay. I guess for you, Kevin, another question, and I mentioned this right when we started. we had another investor ask us, well, when's a good time to get into multifamily? And I know what my answer was to her, but what would your answer be to her?
Well, I guess it depends on how the investor is asking that question. I guess, are they looking at it from the perspective of currently being a single family investor? Are they looking at it from comparing multifamily investments versus other commercial investments, office, retail? I guess the timing depends on the investor themselves, but I think just looking at the cycle, it's a good time to invest in multifamily because it's been so stable over the past 3 to 5 years. Rent growth has been strong, occupancy levels have been strong, and in a lot of markets, even with the amount of supply that's coming online, apartment and multifamily fundamentals are still going to remain strong. So I guess the general answer is it's a good time now to get into multifamily investments.
Great answer. My answer to her was quite the same, because they're looking at multifamilies as one of their end games. And it's like the answer to that is like, when does the end game start? Start it now. Yep. Now is a very good time.
I agree. The sooner the better.
Yes.
Yep.
Well, do you guys have anything else to add?
And on that topic or in general?
In general on this topic.
Sure. Yeah. Just getting into multifamily, it is a mind shift. It's definitely something that you do have to wrap your mind around, but it does come out to different, just more numbers. If you do have a single family home, a duplex, a fourplex, you'll find that getting into larger properties, you'll have an easier time now getting financing because now it's more about the numbers. You're also now, if you have a fourplex and you have 3 vacant units, or an eightplex and you have 5 vacant units, that may make your financing options very difficult. But if the same thing happened where you have 5 vacant units across a 100-unit building, you have many more financing options that are going to be in your point of contention where you're able to get into them. Plus that with your financing is now you also have ways that you could push financing that's for the property, and it's just going to be based on the numbers. So easier for you to basically get a loan.
Nice. Anything else you have, Kevin?
I think Jay hit it all.
Well, thank you both so much for being here. And thank you to all of our listeners for listening. This is the REI Foundation Podcast with Jason and Peely, Multifamily Mondays. Thank you again for being here, Kevin.
Thanks again.
You're awesome.
Hi, everybody. Peely here from the REI Foundation Podcast. Looking to rev up your wholesaling or house flipping business? Go now to houseflippinghq.com. Jason and I are part of a house flipping family, a community created by Justin Williams. Would we be where we are without him and without his community and his mentors? Probably not. Justin and his team basically handed us personalized shortcuts and exact strategies that have made us explode in today's market. So if you're looking to take the next step, go to houseflippinghq.com right now. Again, this is Peely from the REI Foundation Podcast. Thank you so much for listening, and we are so grateful for you. Have a great day. Bye.
Thanks for tuning into the REI Foundation Podcast. Check back next time for more awesome tips and strategies to launch your new you in real estate.